Hello, ladies and gentlemen. Welcome back to this end of day market update for this beautiful Thursday, March the 20. Well, March the 20. Sorry, March the 18th of 2021. Please excuse me. Has been a crazy week, as you guys very well know. So we're coming to the home stretch. It is Thursday. Tomorrow is the end of the week, and coming into tomorrow, we are a tad bit concerned as to what is going to happen. So if you saw yesterday's video, we were anticipating a bit of a rally coming into today, given the close and the bullish sentiment that came out of the FOMC meeting. But what ended up happening was that an oversight in my part was that during the meeting, right, our Fed chair, Jerome Powell, stated that he has no concerns of inflation. So that should have been a bit of a green light, not a green light, sorry, like a red light, in that because of inflation, right? Because if there's a rise in inflation, there will be a rise in the 10-year yield. So that is exactly what happened today. So overnight, and then into the trading session, the 10-year notes, they rose by about 11 basis points, roughly 1.7%. The Nasdaq dropped about -3%, while the S&P dropped just roughly 1.5%. Taking a look here at the sector scoreboard, all right, the S&P sectors. So all of these being the financials, all the way down to the energy. As you know, financials benefited of the rising yields because, if you don't know, just a quick lesson. High interest rates tend to improve their profit margins as they earn more from their spread between the rate that they borrow versus the rate, the rate that they borrow short term versus the rate that they lend in the long term. So that spread, that's how they make their money or their profit margins. So that's why you saw Bank of America, JP Morgan, Wells Fargo, all of them financial stocks or bank stocks rallied significantly today, while the rest of the market was in the red. So, as you note, also the XLE, which is the energy sector, sold off around 4.5%, and followed by the XLK, which is the technology sector, that is down 2.77%. So, what does this mean coming into tomorrow? What the hell is happening? All right, and so actually, let's take a look at the 10-year Treasury. Sorry, the 10-year, the 10-year Treasury chart, and see what's going on. So coming in here, right? So just let me delete this. I've been developing a wave count here, and notice that this was a zone of pure panic, right? Because why? This area here, that one I just highlighted, was the pre-pandemic levels. So which meant that during the pandemic we sold off, right? And then 1 year exactly later, right? Because this is, well, not technically 1 year later, but almost roughly. Let's say the drop started on the 24th of February, right? Yields started rising, or started become a little bit of a worry thing around the beginning of February of this year. So yeah, technically a whole year passed, and now we're here. So because technically speaking, this is now past the pre-pandemic levels, so there is a recovery in the there's inflation, there's a recovery in the economy and whatnot. Therefore, there is a concern in valuations for the tech sector. And given the fact that the tech sector was the sector that led the rally and not I would say the recovery, but the rally in the overall market, right? Rallying about, say, 80% to 85% from the March lows of 2020 to our recent highs around the end of week the end of February of 2021. So that's where we stand. So this is pretty important for us to keep a track on, right? So just to quickly review the wave count. So after the March sell-off, we ran up in wave 1. We then since corrected in wave 2, A, B, and C correction. We're now tracking 5-wave move into wave 3. So up in 1, we then printed 3 waves down in 2. We rallied into wave 3. We then printed 3 waves down in 4. And we have since impulsively pushed higher in the wave 5. Now, is this complete? Perhaps it is, right? We've already reached a 127% extension. So maybe this is, or because we can go higher, right? Who knows, into a 200% extension. But for now, we're going to leave it at that. So if the rates keep on rising, then tech will keep on selling. All right, that's just keep that in mind. So let's go back into equities or into futures, right? Let's take a look at the S&P and let's take a quick review on this. So coming out of yesterday's video, we were tracking this count as if we were still looking for a high, right, into wave one. So yesterday we noted that perhaps because of the close, because of the bullish close from yesterday, we were going to close here and then ramp up higher. That wasn't the case, as also another economic data that was released today was the jobless claims, and that was a pretty disappointing. It was pretty weak data, and I think it came out at 700,000, which the expected was 770,000. And also what as I mentioned earlier, what put pressure on the broad market also, or in the S&P, was the sell-off on crude oil, right, on the energy. So crude oil dropped about 8% today. So back at the chart. So coming out here, we were tracking this as a possible completed fourth wave, and that we were going up higher. So there's still there might still be a chance that this is the count, right? And given that we held support in the in the $3,900 region, which, as you can see here highlighted in this blue box, is a level of high support. Okay, let's take a look at the moving averages. Oh, sorry, I just blanked out there for a second. So we're trading we're still trading above the 50. Right, the 8 EMA is a little bit, it closed below it, but we're still finding support in the 50 simple moving average, which it's in confluence with the middle trend channel, which if you project this channel from the wave one completion to the wave two, that forms this channel in which the price action should be moving within. All right, so given the fact that we're moving in the middle, and the middle is the 50 simple moving average also, that gives us a little bit of relief that if this is the count, that we should be coming a little bit higher or bouncing into tomorrow. All right, taking you now into the alternate count, which is this one on the S&P. All right, we are now, instead of looking for a higher move into the wave one completion of wave 1 and 5, as you noted in our previous count, we are now tracking this as a completed wave one, and we are now printing 3 waves to complete wave 2. All right, so where will wave 2 complete? If I take a retracement from the low of wave 1, or the start of wave 1, my apologies, to the end, right, we can note that a possible retracement of this whole move can be anywhere between the 38 to, essentially anywhere between the top to, can't break the low, but anywhere between a typical retracements are anywhere between the 38 to the 61.8% retracement of this overall advance. Excuse me, I kind of repeated there myself. So if this is the count, so expect for the S&P to bottom somewhere in the zone. We'll take it a day at a time. We'll just have to see what happens tomorrow. And going back a little bit, so this is why we recovered over here, and our members were eager to keep on trading. And once we were stalling upon around the zone, we took a trade on Tesla, which I'll review in a minute. But what ended up happening was that we started noticing a trend change, and coming out of also going into the Fed meeting. And I always urge everybody to keep calm and stay collective. Try to be patient. Let the markets dictate the next move, so that you can capitalize on that. And how do you do that, you ask? Just be patient. Just be patient. You don't have to trade every day. You can watch the markets. While you're watching the markets, if it's moving sideways, there isn't a lot of action going on, you can study the news, read up on what's going on, analyze for instance, what's relevant today is the 10-year yields. and the tech sell off. Also look into why oil was selling, aggressively 8%. What happened in the dollar, stuff like that. You occupy your mind so that you do not feel like the need of trading, and that way you become educated and understand the trend, understand what happens here. If one thing affects this, this will be affected. If let's say, for instance, the dollar sells off, what happens to the S&P, or what happens to the overall global markets? Okay, so that's my suggestion. So that's what I'm exercising in our group. All right, which, by the way, this is my Instagram page. A little bit of a sidetrack here. This here I post daily updates, and sometimes I do some quick videos of the S&P and the Nasdaq, but also I do some currencies. So, for instance, I've been tracking the USD CAD to complete wave 5, which has been moving a little bit due to the increased price in the dollar. So this is we have to take a look at this count again, but that's for another topic. However, to join our group, just click on the link here. You can see I have my YouTube link here, which you can please subscribe and give me a thumbs up. That'll really help this channel grow. And also just click on the Discord, where you could enter your email and just join for free. All right, at no cost, guys, no cost. And again, this is what we review every day in our group. We talk about what's going on. We try to stay patient, very disciplined. All right, and that's key to surviving these markets. All right, enough with that rant, and back to the important stuff. So, just to recap, all right, so we're looking to see if this is the actual wave count, if wave 1 completed on the 16th of March, and now we're trying to print 3 waves down into wave 2. All right, so we'll know soon enough what the direction of this market is going to be, and so far it's still bullish, right? There's not much change. It's just a pullback. All right, so if we do end up breaking below these lows, so at that point it's going to be a little bit of a concern, and we have to reevaluate the wave count. But say, for instance, if we find some support here and we go long and we end up rolling over, this is where risk management comes into play. Okay, but let's just take it a day at a time, and we'll see what happens once we cross that bridge. All right, so taking you out of this count, and let's move on to the Nasdaq. So the Nasdaq was a bit of a pain, and it was sad to see what's happening there today. All right, but as I explained, and you guys already know why. So there's 2 wave counts I'm tracking here. All right, the first interpretation is that we've completed the intermediate wave 1. Okay. And then we were selling off in 3 waves to complete wave 2 in the intermediate degree. Okay, so if that's the case, right, we found support in this upper trend line. If that's the case, and then we bounce in 5 waves to complete wave 1, we're now completing wave 2. Let me take you down to the 1 hour time frame. All right, we're now completing wave 2. And so if we take some retracements from the start of wave 1 to the end of wave 1, we note that we are within those typical Fibonacci retracements of the 38.2 to the 61.8%. It's improbable that if we do end up pushing lower, then we'll have to reevaluate the count, which I'll review in just a second. But going back to this count, right, if this is A, B, and down in C, we should be able to start looking for a bounce coming into tomorrow. Okay, so the levels to watch on the Nasdaq are 12,750, 12,620, and the last resort, the last resort will be the level of 12,450. All right, so these are 3 key levels that I'm watching, and these all come in confluence with several key supports that we see back here. Okay, another thing that I noticed, all right, was the formation of an inverse head and shoulders, all right, which you know that an inverse head and shoulders pattern is bullish. So let's draw it up real quick here. If I could find it, please give me a second. Rarely do I draw these inverse head and shoulders. Oh, where is it? Oh man. Anyway, I can't find it, guys. Ah, duh, here it is. Head and shoulders. So we get the left shoulder, we get the head, all right, and boom, and off we go. Let me just fix this. So an inverse head and shoulders, if I do, just do a quick search on Google, and you'll see that an inverse head and shoulder is a bullish pattern. All right. So that was a quick lesson in patterns. Apologies for the delay on finding that icon there. I rarely use it, but just because I can spot the actual development of it. So taking you out of this wave count into the alternate wave count on the NDX. And that pattern is the one that suggests that we are still within a corrective pattern, right? A corrective wave count. So that suggested that instead of this being wave 2, the end of wave 2, as you notice in the other count, right? Wave 2 is actually further down here. Let's take a look at here. Let me copy this bad boy and bring it down here. So wave 2 is here, and that we did 5 waves down, or A, B, C into wave A. We're now going 3 waves up, A, B, and C into wave B, all right? And we are now looking to go lower into, or we have already started the wave C decline. So how do we find out if this is the count, right? If this is, if we're going to go down into wave C, or we're going to go, or if it's the other count, right? Let me just have them side by side. So the way to know and be patiently waiting for this is when we see the break of this low. All right, when we see the break of this low here. Once we see price action fall below that, then we can direct ourselves to this wave count, and we can short the market down to wave C. All right, but not until we confirm that it has broken this low, and it's still waves to go. Let's see, from this high, well, from here to down here, we still have about a 4.5% left, which is significant. All right, guys. I don't favor this count, but this is an alternate. What I am favoring is this one here. But again, trading is all about having a game plan, and then also risk management and executing that game plan and being very responsible with that, because this is your hard-earned money. So you don't just want to give it away and lose it to the other trader who's receiving your order, right? So with that being said, I thank you so much for watching these videos. I do them so that I can help traders who are struggling and who are looking for direction in the market. So I use Elliott wave theory, technical analysis, as you can tell, to navigate these harsh markets in these crazy conditions, or crazy environments, I should say. So once again, just a quick reminder, follow me on Instagram. Alternatively, just click on the link here, join our free Discord group, and subscribe to my YouTube channel. Give me a thumbs up, and if you have any questions, just leave a comment down below, or join the Discord. Ask me. You'll find me there. I'm always there. There's a group of great traders. Everybody is there. Everybody's friendly. So just come in and join us. Have some fun with us. And with that being said, excited to see what brings tomorrow. And good luck. Stay safe. And have a great rest of your night. Take care, guys. Bye-bye.